Hello and welcome to another Foenix Partners update. Today focusing on the historic Article 50. So a historic moment in Britain's history. Didn't feel like a particularly momentous occasion in the financial markets on the 29th of March. The pound had actually had a torrid time overnight. The dollar had pushed it lower. So sterling US dollar was down 1%, but started to gain as we headed towards the midday announcement from Theresa May. That optimism continued actually. And really, I think that we want to take an opportunity to take a step back and look at what we've seen. Modest gains on the day, but really that they only in part explain the fact that the market has been focused on exclusively focused on Brexit and Brexit speculation ever since the announcement from David Cameron on the 20th of February last year. Now, thoughts turn to how sterling might continue to trade in the coming months. Now that we're part of this, we've started this 2-year period. And really, I would say the pound has lost 20% since the referendum result. What that means is markets are positioning for a lot of bad news. And now, as we enter these negotiations, the question is, will the reality be as bad as markets have feared? Our view as a house is that there is probably not too much more downside in the pound, mainly because how much worse could things go? So our view is that actually, as we start to get more clarity and more information about negotiations, there is scope for a little bit more of a bounce. And so the risk for sterling is more of a bounce than there is for a move to the downside. So we're not predicting a sudden surge in the pound, but we are saying that the tone that we picked up in yesterday's update from Theresa May suggests that there could very well be a more sort of assertive and optimistic theme emerging now that Britain has its seat firmly in the negotiating table. Thanks for joining.